Well, today we're going to talk about startup and operating budget. I think this is a really important topic because whenever you're starting your business, when you need to try to do things right from the start as best that you can because it's not an easy venture or process to go through. So there's a lot of small business survival statistics that I could share with you, but every time I look at statistics, none of them are the same. Statistics claim that 90% of businesses fail in the first year, while others are really more optimistic and claim that only 80% fail in the first year. But businesses fail for a whole variety of reasons and at different points along their life cycles. But there's a lot of businesses that don't make it past the first year, while others may roll along for several years. But setting the statistics aside, most of us would probably agree that the first-year failure rate for a new business is pretty high, or the reasons for failure can really vary as much as the statistics do. But again, I think we would all probably agree that the primary reason is usually going to be financial in nature. So to avoid financial disasters in the most unpredictable year of business, you really have to have a realistic idea of how much it's going to cost you to operate the business. So today we're going to cover two areas where most money mistakes occur when starting a business, and that's the starting and operating budget. And then I'm going to show you an approach to estimating expenses by breaking the process down into four major cost categories. So it's really easy to underestimate how much money you're going to need whenever you start your business. And this is often the root of future financial problems, and it's really hard to overcome unless you have a good supply of cash flow in reserve, which most of us do not. So my advice whenever you're estimating your startup expenses, follow the rule of two. Expect everything to take twice as long and cost twice as much as you planned. In fact, I have some friends that are actually going through a process right now of starting a business, a restaurant business, and they're building out in a brand new building. So it's kind of like starting from the ground up, and construction's taking longer than they planned, and expenses are starting to pile up on them. So, those are just the things that happen whenever you start a business. So you have to just try to just expect that things are going to cost a lot more, than you originally planned. When it comes to the operating costs, I think that's where most of the underestimations typically occur. Because I think people, for the most part, really are trying to pay as close attention to their startup budget as possible because, that's typically what you're going to the bank to borrow money for. But the operating costs, are a little different. I think we go into business expecting our sales to support those operating costs in the first year, and that's not always the case. I think another reason for underestimating your operating costs, even if you have years and years of experience in the industry, if you didn't have that experience from a business owner or management perspective, there's going to be a lot of operating costs that you really may not be aware of. So a piece of advice I can give here is to talk to people in your line of business who are not direct competitors. Ask them what type of expenses they have. What are their regular expenses, and then what expenses do they have that sometimes come up unexpectedly. So remember this on estimating your startup and operating expenses, that try to estimate higher costs, lower revenue, and a longer time for your business to reach that break-even point. And I know that the numbers from that process is going to be really intimidating, and you might feel, the bank is never going to loan me that much money. But above all, whoever is funding your small business venture, what they want is to know that you have a realistic business plan. And the small business people or entrepreneurs that borrow the amount of money they really need, no matter how large, are really going to be more likely to survive than those who borrow less and run out of money. Because when you run out of money too soon, the business isn't going to move forward at all. So as I mentioned at the beginning, a good way to estimate expenses is to break them into cost categories. And by doing this, it's really going to help you consider all the costs that might be relevant to your business. So this first cost category is location cost. And location cost refers to the particular facility that you're going to be moving into or building, the geographic location. So that could be, what city you're locating in, what area of the country you're locating in, as well as the type of business that you're starting. So when we talk about facility considerations, these are things that include things like rent, or if you're, building a building, what your building costs are going to be. Again, if you're renting a building, you definitely should figure out what the utilities are going to be. And a good way to do this is to check with the utility office to get the usage history on that building. So you can, go to the where you pay the electric bill, and they can tell you, what the wattage usage was for that particular facility, and give you a good history on it. That something else that you will want to take in consideration when you're, looking at estimating your utilities is you may be moving into a facility that was, let's say, a small business services office, an accountant or something of that nature, and they are only open, 5 days a week. Well, if you're moving in there and you have a different type of business where you're going to be running equipment or something like that, then you can expect that your utility costs are going to be higher. So those are just some things to keep in mind. In regards to geographic location, there's often going to be state and city ordinances like permits and licensing that are going to be required, and as well as facility maintenance. So, if you happen to be located in the northern area of the country where you get a lot of bad weather during the winter, you may have to budget for some snow removal services. And likewise, in the summertime, you may have to budget for some lawn care services. The third category up there is business type. And so some things to consider under business type are things like building insurance, because depending on what type of business you have, your insurance rates are going to vary. So if you're in a higher risk category like construction, you're going to pay more for insurance than someone that is in accounting. Same thing with remodeling. The type of business you have is going to be a cost factor there. So if you're a business that uses hazardous chemicals, or you use equipment that increases the likelihood of fires erupting, then there's going to be costs that you're going to have to spend to get those the facility up to code, like ventilation systems or sprinkler systems. And that's a cost that I've seen some businesses, they didn't expect that cost whenever they rented or bought the facility that they located in. Something else that you might consider in this category are routine inspections and maintenance. So let's say, as an example for a restaurant, you're going to have things done like you're going to have your septic grease traps pumped every so often, and the vent hoods that go over your grill are going to have to be cleaned and inspected. So again, look at the industry type expenses that will relate to your specific type of business, because there are all kinds of these little bitty, what they seem insignificant and you forget about them, but then those little things can really add up over time and cost you a lot of money. The second category is production and selling cost. So this is the cost that you're going to incur from the moment you're getting the raw materials from the supplier to make your good or service. So if you're a restaurant, you've got to buy hamburger buns, and you've got to buy meat, you've got to buy produce. So you're going to have costs that you're going to have to purchase inventory. You may even have some kind of shipping costs associated with that. And then most people who have inventory of any kind are going to have to consider storage. So where are you going to store all of these raw materials until they're used to make your product? You're also going to have wages, because you have to hire people to make the product. Aside from wages, some other costs that come with employees are things like employment taxes and insurance. And I'm not talking about just health insurance. I'm talking about, mandatory things like workers' comp. And again, your workers' comp insurance could be a factor. The rates could be dependent on, how volatile, I guess I'm trying to say, how the chance of someone getting hurt while they're working is going to be a cost factor there. You also have to consider the equipment that you're going to need to make the product. And so you may look at how much the equipment is going to cost to buy, but then some other options to be thinking about is leasing equipment. It's often a lot more cheaper and more feasible to just lease equipment that you need rather than go and buy it outright. And then finally, you also need to think about packaging that product because you have to get it now to the consumer. So what are the packaging costs going to be? It may be, freight charges to get your product shipped across the country to your customer, or it may even be something as simple as little plastic containers and bags if you're just selling hamburgers. Other costs that are associated with getting your product or service to the customer, what I call selling costs, are things like credit card machines. You may not think about a credit card machine whenever you're budgeting for your costs, but those do cost money, and you do have to pay to use credit card machine services. Another biggie, this is especially for anyone that does retail, and that's sales taxes. So remember that from the money that you make whenever you sell your goods, you're going to have to pay the state sales taxes on that, and that can really add up to a big chunk of money. So you're going to have to make sure that you factor that into your operating cost as well. Next slide, April. Our third category is marketing expenses, and this is pretty easy. I think typically most people don't miss too much in this category. But you're going to have your pre-startup expenses. For instance, you may have to have some market research done whenever you're doing your business plan. If there's a cost in that, make sure you're tracking that in your startup expenses. Even after your business starts, you're going to have different advertising expenses. You're going to need a sign. And let me tell you that sometimes those signs, especially if you have a retail facility or something, those signs can be very, very expensive. You're also going to have to consider the other materials that you'll need regarding the brand of your business. So if you're going to need a logo, that's going to cost you money to have created. Figuring out ways that you're going to communicate with your customers. So you may have to have a website created. You might also want to figure in that if you're going to join the local chamber of commerce, you'll have those membership fees. And then also you have some research costs there associated with marketing. So I mentioned, a minute ago that you may have to do some market research whenever you're, in that business planning phase. But that's also a cost that you really should have throughout the life of your business. And one of the greatest examples I can give is becoming a member of your industry association. So I consider that a research cost because it's helping you keep up with the changes in your industry and what's relevant. So our final category are administrative expenses, and this really does cover a big gamut of things. But you're probably going to have a budget for professional fees such as accounting and payroll services unless you do it yourself. You're also going to have to purchase some management tools possibly. So whether you hire a bookkeeper or not, you're probably going to have some kind of accounting software like QuickBooks. Then you might have some other tools that you like to use to manage your business. It's going to have a monthly subscription fee attached to those. So for instance, in my business, I use Gmail, but I need a way to track my emails a little bit better, so I use a service called Boomerang, and it's not that expensive. It's $5 a month, but I have several different tools like that I use, and those subscriptions can really add up. Of course, you're also going to have office supplies, so that, envelopes, paper, things of that nature, and think about the technology requirements that you're going to need. Most businesses nowadays really do need to have some kind of internet service. And here's something to really be aware of. I was kind of shocked by this one. A lot of times, services that you buy as a business are going to be more expensive than what you pay as an individual. So, for instance, the internet service that I have is $50 a month for residential service. But if I had an office in town and had internet hooked up there, that same package would cost me $75. So it's not really fair, but that's how a lot of services work. It's just more expensive if you're on their business package. You're also, obviously going to need phone, computer, printer, those types of things. I have worksheets that I put together, and I apologize because since I'm not able to actually get into the room, I can't share my screen with you. However, we are recording this, and I'm going to have April load this worksheet up onto the Acorn Project website so that you will have kind of a template. And so what it is it has a startup budget. So it gives you a lot of different items that you may have as you're starting up your business. And then it also has a tab that has an operating budget on there. And again, I just list all kinds of operating expenses. It's not totally inclusive. So depending on your type of business, there may be some expenses on the list that, or that are not on the list that would be relevant. But it does have a lot of categories of expenses, which will kind of, again, help you kind of think through some of those operating expenses you might be missing. And then finally, also included in that workbook is a cash flow statement. And I know that's a really scary term, and I don't necessarily have it properly set up like a cash flow, but what I like to do is if I'm working with a client and we're figuring out the operating costs, we'll say, oh, well, you have a yearly membership fee with the chamber that's $300. That's going to be due in December. So I can go to that cash flow sheet, and in December for that expense, I can put that $300 in there. And so that's what I do with that cash flow statement. I just go through there and I fill in all of the operating costs that I'm going to have, whether they occur on a monthly basis or, biannual basis. And that's really going to give you a really more realistic view of what your costs are going to be each month throughout that first year of your business. And, of course, I'm always available if you get in there and start using the worksheet. You have questions, more than happy to help. At the Acorn Project program, we provide technical assistance to entrepreneurs free of charge if you're native.
Great. Thank you very much, Lynn. That's wonderful information. I look forward to seeing the workbook. You mentioned some great tools here. I know that costs and budgeting can be scary for some people, but I think if they have the right tools, like you mentioned, it takes some of the fear out of it. So thank you very much. We do have some questions. I'll just go ahead and share with you. The first question that came in is, instead of the hassle of giving payroll checks to employees, can I just hire them as a contractor?
Oh, okay. That's a good question. That's a question that I've actually gotten a lot, and one that I actually kind of had myself. So here's kind of the answer to that question. It depends. There on the IRS website is I think it's called a contractor checklist. So if you go to irs.gov and search for the contractor checklist, it's going to tell you how to determine if the person that you're hiring can be determined to be a contractor or whether they have to be an employee. And so here's one of the good tests that you could do. If you're telling that person when to come to work, how they need to do their job, and they are using your tools or your equipment, they are an employee. They are not a contractor. Contractor is someone that they pretty much set when they're going to do the work, how they're going to do the work. They're using their own tools to do the work. So that's the quick test. Better answer is to go to the irs.gov and look at the contractor checklist to make sure that you can do that with that person.
Great. Okay. Thank you for that. And the next question that came in is a small business required to offer health insurance?
Oh, okay. I'm not an expert at everything, but But to my understanding, no, a small business does not have to offer health insurance. However, I think if you offer it to one employee, you have to make it available to everybody. But I mentioned earlier in the presentation when I talked about insurance costs that you may have to offer workers' comp, and that's not something that you have a choice to do. If you have employees, then you're going to have workers' compensation. The only workaround on that is if you work for yourself, you don't have to take workers' comp out on yourself as the business owner. You can forego that, but you do have to make sure your employees are covered. I will tell you, though, that in the long run, I think getting workers' comp, even on yourself, if you're a business owner, is probably the best thing to do because you never know when an accident is going to happen. If you don't have workers' comp, you better make sure you have some other really good health insurance in case you get sick, in case you get hurt on the job.
Okay, we have one more question, and it is, my business idea is seasonal. I guess this person is not in business yet. My business idea is seasonal. Do you have any advice for me on how to prepare an annual budget?
You know, my husband actually has a seasonal business because he does landscaping and lawn care. You know, again, there are still going to be some of those expenses, your business expenses that you might have that last throughout the whole entire year. But I think that my biggest suggestion is probably refers more to your personal budget, because if you're doing a seasonal business, if that's the only income that you have coming in, you're really going to have to be careful to budget that money to last you throughout the entire year. And that's what my husband does, because he works from March through October, and then he's off the rest of those months. So all the money that he's making, he has to budget it out so that way during the winter time when he's off work, he still has money to pay the bills and the things that he needs.
Lynn, thank you very much for your presentation today. I just want to let everyone know that the recording will be available on the Acorn Project website. Thank you for joining us today. The web address is www.nativebiz.org. All right, well, everyone, have a nice day, and hopefully we'll see you next month. Our topic for next month is on crowdfunding. Be sure to check out the whole webinar library on our website, nativebiz.org. We look forward to helping you out. Thanks, everyone. Have a nice day.